everyone, Kathy Lean here. I get a lot of emails from new traders, and one of the most common questions that I am asked at least once a week is, what is the best chart or time frame to trade? 1 hour, 4 hours, 15 minutes, or 5 minutes? Traders who want to take long-term swing trades usually know that they want to key off daily charts, but anyone looking at shorter-term trades may have a harder time selecting the right chart or time frame to use. To answer this question, we have to understand the difference between these time frame charts. Let's start with the 4-hour chart. In each 24-hour cycle, there are 6 4-hour chart candles, and the 4-hour chart encompasses about half of a trading session or an 8-hour cycle. 4-hour charts are perfect for traders who want to go for bigger moves, 60 to 100, 120 pips, and are willing to set a stop of 50, 60, 70 pips, maybe even more if you're trading the pounds crosses. Trading off 4-hour charts requires patience because it takes 4 hours for the candles to form. This is a great time frame to trade for someone who doesn't have a lot of free time. Think doctors, lawyers, or someone who just has to be at their desk or cannot be at their computers all the time and wants to check on their trades only 2 or 3 times a day, like once in the morning, once midday, and once at night. A good example is this Eurodollar chart. It took a long time for the breakout to occur. And once it did, literally 4 to 5 hours for the move to happen. That's how long it took. The 4-hour chart is not a good time to trade for anyone with a short attention span that cannot stomach a 30 or 40 pip move against them and feels the need to check quotes every 30 minutes or an hour, or even shorter than that. The 1-hour chart is a good time to trade for someone who has less patience, more free time, and ideally wants to be in and out of trades within a few hours, at most 1 or 2 trading sessions. The 1-hour chart contains more information than a 15-minute chart, for example, but is less lagging than a 4-hour chart. What I love about trading 1-hour charts is that it's short enough to reflect the current momentum of the market and long enough to smooth volatility. If the market is jerking around with lots of wild swings, usually the dust or the battle between bulls and bears has settled by the time the 1-hour candle closes, so you won't get caught up in sudden pops or drops. With 1-hour charts, you can go for bigger moves with tighter stops. Personally, I trade off the 1-hour charts for this very reason. I trade emerging momentum in the direction of the real move in the Asia and New York trading sessions. That's exactly what my ZIP strategy does. Now, I also look at other time frames to make sure there isn't any significant moving average support or resistance in the way, but my trades are always triggered off 1-hour charts. Thursday's Euro Kiwi trade was a perfect example of how 1-hour charts smooth volatility while signaling direction. There tends to be quite a bit of momentum at the early New York Open. My New York session trades are sent around 6 a.m. or 10 a.m. GMT. You can see in this Euro Kiwi chart that right before the New York Open, there was a lot of volatility with ZIP buy and sell candles, which are the white candles with the green and red backgrounds. But by the time of the New York Open, it is clear that the bears have won out. Not only did I have 2 ZIP sell candles, but a confirmed move below the ZIP indicator line combined with lower lows and lower highs, which signaled that sell-off was going to happen into the New York Open. So I went short Euro Kiwi, and boom, a beautiful, durable short trade. Of course, if you watched any of my other videos, you'll know that fundamentals are very important to me as well. And one of the main reasons why I took this Euro Kiwi short trade was because German retail sales and Eurozone PPI surprised to the downside, while New Zealand trade data surprised to the upside. So we have fundamentals and technicals on our side. On Monday night, which is Tuesday morning at Asia, I went long CAD Yen at the Asia Open. The 1-hour charts showed CAD Yen closing the New York session at its highs, with further continuation in the early Asia hours. CAD Yen was in the ZIP buy zone, which is when the currency pair is trading above the indicator line and the background is green for buy. Fundamentally, it was a rate hike bet. I expected the Bank of Canada to hike by 50 basis points, and for Canadian GDP, which was coming out later that morning, to be strong. Dow futures were also up strongly, which was bullish for dollar yen. So we took the trade, and it was a quick and easy winner. The 15-minute chart is a good time frame to trade for day traders who want the chart to show cleaner trends and a clear outlook. It may provide less detail than a 5 or a 1-minute chart, for example, but still provide clear short-term trading opportunities. It is suitable for more relaxed day traders who still want to watch the screens the entire time that they're trading. However, because there are fewer trading opportunities on the 15-minute charts, it may be easier to hold multiple positions than a 5 or a 1-minute chart, for example. 20 to 40 pips targets may be suitable with 1-to-1 risk reward, which only works, of course, if you have a strategy with a high win rate. The 5 and 1-minute charts are suitable for traders who need a lot of control, who do not have the patience to stay in any trades and want to get in and out quickly. That is the time frame that my trading partner Boris Schlossberg trades. He does well, $1,000 in 1 day last week and $2,500 in 48 hours. He hasn't had a losing day in months. He trades stock indices, gold, oil, crypto, and currencies with our BK4X members live 1 hour a day, and that's all it takes to make money with Boris. At the end of the day, the best time frame to trade really depends on your own personality and preference. Money can be made on trading any time frame. You can buy and hold investors who do very well, and you have successful day traders. If you find yourself checking quotes every few minutes, then the 4-hour chart really isn't suitable for you because the trading off this time frame requires patience. And in reality, even though you may think you may have patience, you don't. If you put on a chart based upon a 5-minute chart and then head out to work for the rest of the day, that's really not the right time frame for you to trade either, because a lot can happen, and usually 5 minutes you're trading with very tight risk and reward. I made 213 pips last week trading 1-hour charts for 3 days. Boris made $3,000 in 3 trading days trading off 1-minute and 5-minute charts. So if you want to trade with us every day or learn how we trade, check out bk4x.com.